Well, in the commodity spotlight this week, Argent Minerals, a silver explorer that recently upped its resource estimate at its Kempfield site, which is just south of Orange in New South Wales. But for more on the company and the outlook for silver as well, we're joined by Argent's Kerry McHugh. Thanks so much for your time in studio this morning, Kerry.
Thank you very much, Brooke.
Just give us a quick background to the company and the listing, which was April last year.
Yes, that's right. Well, Argent is one of the newest exploration companies on the Australian ASX. We listed in April of last year. We raised $4 million, and that was a pretty good effort, seeing that at the time that we listed, the markets had fallen very substantially. But we managed to get the listing away, which is a great credit to our supporters and to the people that believe that there's a good future in silver and also in the gold properties that we have. We've currently got, at least we raised $4 million. We have $2.8 million in cash at the end of March, which is a good effort. We've spent over $1 million on exploration. And I guess over the last 12 months, we think we've achieved quite a lot. We've come up with an initial resource at our Sunny Corner property. And our Sunny Corner was the first major silver mine in Australia. It was a very high-grade producer of silver, about 13 ounces to the tonne. And it lasted for about 10 years. And Argent has the right to earn a 70% interest in that property. And we've currently got a resource of around about 1.5 million tonnes at about 7% combined base metals and some silver.
And there's also been a recently announced silver resource at the prospect in New South Wales, and yes, with any luck it'll be sort of the next biggest find since Sunnyfield.
That's right. What we've done at Kempfield is we've done around about 4,000 or 5,000 metres of drilling over the past 12 months. We've done a lot of metallurgical test work, and that's been quite successful, showing recoveries of around about 70% in our major zone. And we've brought the resource to around about 13 million ounces of silver. And of that 13 million, around about 9 million is in the top 70 metres of the deposit. And that top 70 metres looks as if it's a very good candidate for a heap leaching project to produce silver. And so we're quite confident that we'll get an economic, or at least that we have an economic deposit on our hands. And to that end, we've started the scoping study, and we expect that'll be finished in around about a month.
You mentioned the heap leaching project. If you had to write a dummy's guide to the mining sector and resources, what's the heap leaching project?
Well, with heap leaching, the way that the silver is produced is that it's crushed down to a fairly fine size, about 3 to 4 to 5 millimetres, excuse me, and it's then agglomerated with cement, and it's placed on pads, and the pads can be maybe up to 18 metres in height, and then they're then treated with a leachate, and the leachate dissolves the silver in the heaps, and the silver is, or at least the liquid, is collected in ponds and then passed through a process called the Merrill-Crowe process. And that's a process where essentially where zinc powder is put across the liquid, and the zinc powder precipitates the silver out, and from there you get silver bullion.
Well, there you go. I've just learned something right there today. Talk to us about the silver price, because over the weekend I think it hit a 9-month high. It's around that $15 an ounce mark. Interestingly, and we don't talk a lot about it probably, but a lot of the time we could focus on the gold price, as a lot of the commentators do, but the silver price has quite a correlation with the gold price. And yes. So have you seen that sort of just track the gold price recently?
Yes, that's right. Over the past, at least the past 10 years, if you look at a graph of the gold and silver price, and you can see it on the screen now, silver tracks gold very closely. The changes tend to be, at least the amplitude of the changes tends to be greater for silver, so that when gold's going up, sometimes silver will go up faster. Sometimes when gold's going down, silver will go down faster.
So more volatile, would you say?
Yes, it's more volatile, but it still tracks around the same trend as that graph shows. Now, what's happened over the past 10 years, silver has increased, well, from around about $5 US 10 years ago to the stage where 2 years ago it was $13. Today it's just under $16. And there's a really good chance that if gold goes up, as people think that there's a good chance that it will. At least I heard your previous correspondent talking about the situation in the United States and
longer
elsewhere.
term, weaker US dollar, those sorts of factors.
That's right. That's right. And so if you've got concern about inflation in the future, currency instability, and the huge amount of monetary stimulus that governments throughout the world are putting into their economies, the chances are that gold will go up on the back of concerns about those sort of things. And if that happens, then there's a very good chance, and in fact an expectation, that silver would track that as well.
Do you as a company have target prices for silver?
Well, at the price that we've currently got, at this stage we don't have the outcome of the scoping study, but I'd feel reasonably confident that at these prices we'd certainly have an economic project. And of course, sometimes people talk about gold going to 1,500 US, and if that happened, it wouldn't be surprising to see silver maybe at $30 an ounce.
That's what you're hoping for anyway.
That's right. Yeah.
Thank you so much, Kerry. We'll have to leave it there. We're a bit out of time. But thanks for coming to the studio this morning to chat with us. Kerry McHugh from Argent. Thank you so much.
Thank you very much, Brooke.